Hello everyone, this is Lien coming to you from the CME NYMEX floor. The currency that I'm watching today and for the next 24 hours is the Japanese yen. The Japanese yen fell to 1-month lows against the US dollar, and today at least that move was largely driven by the continued recovery in US stocks as well as a general rally in the US dollar. We had started the week with some anxiety around Chinese-US trade tensions, but it seems like the market thinks the tariffs announced by China and the U.S. won't actually take effect, and it's just another bargaining chip that President Trump is using on China. And that's true, or at least that's what the market thinks. We could see further weakness in the yen and strength in the dollar as traders continue to unwind their risk-off trades. But the reason why we're watching the yen in the next 24 hours is because we have non-farm payrolls on Friday. And the movement lower in the yen and the rise in the US dollar is a reflection of the market's optimism. They think that Friday's jobs report is going to be good. The expectations are for weaker job growth, but investors are looking for the unemployment rate to fall from 4.1% to 4%, and they also are looking for the weekly average hours as well as average weekly earnings to rise by 0.3%, which would be very good news because we had an improvement in the jobless rate as well as an increase in average hourly earnings. The question is, will we get there? If we do get all of those things and a beat in the headline number, we can expect to see dollar-yen trade above 108. If we do get a miss, of course, that would depend upon where the miss is. If headline number is just slightly weaker, but you get stronger wage growth and unemployment rate, the dollar could still rally. But if the weakness is in wages, then we could really be in trouble. Either way, though, I don't really think it changes the outlook for the Federal Reserve. The Federal Reserve is still expected to raise interest rates again in the middle of the summer. So if we do get a softer report, having just come off the heels of a rate hike last month, I think that the downside in dollar yen may be limited, and we may actually see some bargain hunters swoop in as long as the number isn't terrible, as they position for more kind of negotiations between the U.S. and China in the coming weeks. Next week, there's a possibility that we could have a NAFTA deal, which means that we could see further strength in stocks and just kind of excitement by investors. So that's also another reason why we think if we get a good number, the impact on dollar yen will be stronger than when we get a weak number where bargain hunters could swoop in anticipation of next week's developments. This is Lien coming to you from the CME NYMEX floor. Thank you so much for listening.